hold on a minute. Is the Southern California housing market as bad as they're saying it is for sellers right now? We are going to run through the Southern California housing market report. This is for our diehard data fans. Yes, Die Hard is a Christmas movie. Is the Southern California housing market behaving like it should? Santa's watching right now. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers make the best actual and factual data-driven decisions in this crazy market. It's time for one of our last Southern California housing market updates for the year. Starting with Orange County, let's run through the numbers that matter. We're looking back at November's all the way back to 2018. There is a lot packed into this chart that you may not even see yet. We're going to run through it. So let's start with 2018. What do we see as compared to other years? We see, other than these crazy years here, that listings were up as compared to 2019, a normal year. We can see the pending sales, number of properties going under contract. That was down as well in 2018 versus 2019. What happened in 2018 that led to an increase in inventory and a decrease in the number of homes going under contract? Yes, that's right. Interest rates were racing through the roof and almost hit 5% in November of 2018. And then does anybody remember what happened next? Yeah, they hit record lows and now we're at much higher levels. More insight in the data, and you're going to have to see how it compares to other counties in Southern California. We can see that in 2020, 2021 and almost 2022 and 2023 that the yellow line, the number of properties that have sold, is much higher than new listings and much higher than the properties going under contract. Why is that? Well, that is because typically as we get towards the end of the year, fewer properties are going to go under contract because of the holidays. So the pending sales, we saw a drop as we got into the later months, and that leads to fewer properties closing. So we will expect to see, when we run the number of closings for December, those numbers will be down because the pending sales are down in November. In fact, we can see 2019 through 2021 that there are more properties going under contract than we have new listings. So inventory was being sucked up. 2019 being a normal year, 2020, 2021 not. Now getting into 2022 and 2023, obviously as we've been discussing, demand and supply are both way down, which is leading to fewer closed sales, as you can see. But what's important to understand is we actually see, for the number of new listings, we see a decrease in Orange County. Some other counties we're going to run through are going to have an increase in the number of new listings. Watch carefully. Not a dramatic increase, but an increase year over year. But we can see that pending sales year over year, those have actually gone up. So despite the crazy high interest rates that we've had here towards the end of the year, now they have backed off a little bit. So despite the bad news you're hearing that it's not the time to buy, we can see that there are a lot of folks out there shopping. This is good news for sellers, and it's tough out there for buyers, as we can see, because inventory is down very low. Moving into Los Angeles, similar thing. The number of new listings in 2018 far exceeded any year we've had since there, and pending sales were way down. In fact, they were so low, you have to get to 2022 to be below where they were in 2018 when rates almost hit 5%. So again, we can see here that we have an increase in the number of properties that are going under contract, and we have a slight increase in the number of new listings. So this is interesting to see. Now, fewer sales this time, so sales numbers are down, but we can expect to see potentially more sales closing. Riverside County, big drop in new listings, hasn't recovered since that crazy 2018 time. And we can see the number of pending sales increase through the crazy years, down low. But we have what appears to be, again, year over year increase in the number of properties going under contract. It looks like we've hit a floor to the number of deals in most of Southern California. We have more demand, even with interest rates there and even with tight inventory. Demand stays at a bottom level here. And then we see a slight uptick in the number of new listings, and that slight uptick in the number of properties going under contract. San Bernardino, similar tale, where we've got that increase year over year in the number of pending sales, slight increase in the number of new listings. So you're hearing in the news, inventory is going up. Well, at least in Southern California, in these counties that we're tracking here, the majority of these counties, we also have demand going up. So they're essentially canceling each other out based on what we're seeing in the numbers right now. Ventura always marching to its own drummer. We can see that this is the lone county where we have a big drop in the number of pending sales. Not as many properties trading. So when you lose 100 pending sales roughly at these numbers, that is a huge percentage. That's a 25% drop as compared to 2022. That's a big drop in the number of pending sales. Inventory is staying about the same. So we will potentially start to see overall inventory starting to tick up in Ventura. Ventura, again, always marching to its own drummer, doing its own thing. And finally, San Diego. Look at all those listings they had back in the crazy days of 2018. Now this, we do see a slight drop in the number of pending sales, and we also see a slight drop in the number of new listings. If you're out there shopping as a buyer, this year in November, it's going to be just like what it was in 2022 for the amount of competition potentially. So again, most of Southern California, we've hit a bottom, a lower level to the number of properties going under contract, even with interest rates hitting crazy levels, other than Ventura. Taking a quick run through the multifamily numbers, one of the only places you're going to get this, we can see during 2018, when we had that uptick in interest rates, big uptick in the number of new listings. Interesting, and this, you won't see this everywhere, but year over year, we see more properties going under contract. For multifamily, it's tougher to make multifamily pencil with these higher interest rates. So definitely less cash flow coming out once you factor in the cost of debt service. Again, look at the huge increase in new listings when interest rates hit almost 5%. Inventory is moving up here in LA, and we are also seeing year over year an increase in the number of properties going under contract. Some of the eviction moratoria have ended, and coming February of 2024, the RSO properties, the rent stabilized properties, they'll finally be able to raise rent for the first time in several years. So maybe some landlords are getting excited about those 7% increases after 3 or 4 years. Riverside, we can see inventory all over the place. Look at a huge uptick in the number of properties going under contract. When interest rates were way down, and this was an area where it was more affordable for an investor to buy. Cap rates were higher here. This would have made these very much a serious cash flow area. This is what we call cash cows. So there would have been cash cows here. And then we can see that's since dropped off. Interesting to see year over year the drop in the number of properties going under contract. Again, we're not seeing in every area. San Bernardino, another one where year over year the drop in the number of properties going under contract. There's been a continuous drop in the number of new listings in San Bernardino. Ventura, always all over the place. Don't know what happened in 2019 in Ventura. We can see number of properties going under contract, just 2, slight uptick in the amount of inventory. Look at that, 8 properties closed. So that was a big month for Ventura multifamily. In San Diego, inventory has stayed relatively consistent in San Diego. Had some drops in 2021, 2022, but we're back up. Number of pending sales is at a record low and dropped year over year. And you can see where pending sales are compared to sold properties. So actually next month could theoretically be a good month. And whether you've been naughty or nice, make sure you reach out to us before you buy or sell real estate in Southern California. Quick sneak peek at median home price. We'll give you more in depth in our last update for the year. You can see, holy cow, Orange County, 19% year over year. LA, 8% year over year. Riverside, 5.4% year over year. San Bernardino, 8% year over year. Ventura, 6.8% year over year. San Diego County, 12.2% year over year. Tune in for the update coming in a couple weeks, and we'll tell you more about what's supposed to be happening with median home price this time of year. Altos Research Reports, you know you can subscribe to these, right? I recommend you do, so you'll get these delivered. We're going to take a look at one thing because we've run through a lot of numbers, and that is the Market Action Index. What is that? It compares the rate of sales versus inventory, almost like an absorption rate. The higher the number it is, the more it's a seller's market. If it gets low enough, it becomes a buyer's market. Pretty basic stuff. What we're going to look at is we're going to compare. So here we are at the national level. We can see that it's about a 40, which is a slight seller's advantage. So still a seller's market. Year over year, it's slightly below where it was. So last year was slightly better for sellers at a national level. But look here, back in 2020 and 2019, But look back here in 2019 and 2018, you can see that these numbers were lower then. So it was more of a buyer's market back in the normal years than it is right now. And this is different from what you may be hearing in the news. Looking at a statewide level, zooming on in, we can see the market action index is up year over year. So slightly better right now for sellers in the state of California. Nowhere near where it was during the crazy times. 80, that's a crazy number. You'll see in San Diego an even crazier number, but we are above where it was in more normal years. So interesting to see that if you were going to think about putting a home on the market in this time in 2018 or 2019, it actually would have been less of a seller's market than it is right now, despite what you're hearing in the news, how it's a terrible time for sellers. These statistics are showing it's not as bad as it sounds. Orange County has some of the highest market action index numbers, only surpassed by one other. We're at 52, up year over year, nowhere near where it was 93. Holy cow. And we're definitely higher than where it was in the more normal years. 2018, it was in the 30s. So we're definitely at a better time to be a seller right now, according to the data. Whether you want to believe it or not, this is what the numbers show. LA, you can see year over year better than 2018, 2019. You can see that pattern up to about 74 at the peak. That was a crazy time. Riverside, definitely better year over year. So that varies from the national numbers. Got all the way up to the high 80s. Better than 2019 and 2018 at this point in time. Noticing a pattern. San Bernardino up year over year. Highest was in the 70s, 76. Remember, higher is better for sellers. That was a tough time for buyers. Almost close to where it was in 2019 at this point in time, and slightly above 2018. So not a huge difference from normal years right now in San Bernardino. Ventura, let's see what you're up to. Up slightly year over year. Got up into the almost 100. Holy cow, in April. That was a tough time for buyers back then. Then you can see that we are slightly above more normal years, but not too far off. So kind of a normal market for sellers there in Ventura, even with all those crazy numbers going up and down I showed you earlier. In San Diego, we can see one of the hottest markets we've had. They actually hit 100 for a while. It was completely a seller's market, 100% seller's market. 52. And up slightly year over year, definitely up above where it was in 2019 and 2018. They were, it wasn't even 40 in 2018. So definitely still a hot market for sellers in San Diego, according to these numbers. Since you like data, subscribe to the Altos Research Reports. And as a bonus, you'll get our free weekly email newsletter gently delivered to your email inbox. And you don't even need a receipt to return it. Let us know in the comments below where you think the Southern California market is headed before the end of the year. And I want to know where you think it's headed next year. And it may not be as good as your favorite holiday movie, but this next video is sure going to be fun. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, Berkshire Hathaway Home Services, and we can't wait to hear from you.